What's up, guys? Welcome back to another day trading video, and today we're going to talk about the opposite of fair value gaps, inverse fair value gaps, or IFVG. All right, IFVGs are just as important as fair value gaps. Just because they're opposite doesn't mean they're opposite in value. All right, the fair value gap is a very valuable tool to use just as much as the inverse fair value gap tool. All right, both are very important tools that help you see price action in very different ways. All right, so let's break it down. Let's remember what fair value gap is. A fair value gap is an imbalance in price action where there's a lack of sell or buy orders. For a bullish, I'm pretty sure it's a lack of sell orders. For a bearish, it's a lack of buy orders. All right, so price will go into that fair value gap and bounce right off of it, using it as a retracement tool. Now, for an inverse, it's the opposite. All right, so an inverse balances in that price action, essentially telling us a warning sign price isn't continuing. All right, for a fair value gap, price bounces off. For an inverse, price does not bounce off, essentially acting as the opposite. All right, so very simple. Let's break it down. All right, first we have an example of a IFVG, or inverse fair value gap, and then we have an example of not IFVG, and not an inverse fair value gap. So let's break it down. This is for bullish, and I'm going to break down for bearish first, later on, second. So we have a 3 candlestick pattern. Remember, a fair value gap and an inverse actually too is a 3 candlestick pattern where the first body of the candle and the third body of the candle, the whole candle, has a gap in between, and the middle candle, the second candle, is green, indicating that it is a bullish fair value gap, and there is a gap in between those first and third candles. Remember, the first and third candles doesn't matter if they're red or blue, no, green or blue, sorry, only matters that the middle candle is. All right, so this candle is a green candle, signifying that it is a bullish fair value gap. Let's see how price disrespects this fair value gaps and turns it into an inverse. All right, price comes down to this level, and we can see that the body of the candle breaks the high of the first candle, indicating that this fair value gap got disrespected, now is in turn a bullish inverse fair value gap. Not bullish, but it's just an inverse fair value gap. What does that tell us? That price is going to continue going down. All right. It's supposed to go up, but it did not bounce. It broke the high of the first candle, indicating that price will now be going down. All right. So let's see an example of not an example of an inverse fair value gap in case you get confused. All right, we see the exact same 3 candlestick pattern where there's a gap in between the first and the third candle. The second candle is a green candle, indicating a bullish fair value gap. Price is supposed to go down and bounce. You can see that price wicked down, forming a wick right here, but not a body. All right, so what happened? So price went down, respected the fair value gap, and still bounced off the fair value gap. So you can see it went down, but price respected it, and it continued on up. It did not continue going down because the body was not formed, breaking the low of that first candle. The high of that first candle. It instead respected it, meaning it went back. It went back up and is now continuing up, respecting that fair value gap. All right, so this is not an inverse, but this is why, because the body of the candle broke the high of that first candle, and this is not an example of inverse fair value gap. Why? Because it only wicked out of it. So if it wicked, it went down, yes, but it didn't form yet, and it still bounced right off of it, continuing higher. Let's now show an example of a bearish inverse fair value gap. All right, now we have an example of a bullish inverse fair value gap. Let's go over the example of an inverse fair value gap. All right, we can see that price formed these 3 candlestick pattern where the bottom of the first candle and the top of the third candle have a gap in between. The middle candle, or the second candle, is a red candle, telling us that it is a bearish fair value gap. All right, so there's a gap in between those candles. You can see price goes up acting as this gap acted as a magnet, bringing the price back up. But we can see here that price did not respect this fair value gap. It formed a body, breaking the bottom of this first candle and continued up higher. What should have happened was price respecting this fair value gap and continuing lower. So what can we infer? That price will continue on higher and higher, not respecting this fair value gap. All right. So that is an example of an inverse fair value gap. What is example of, or what is not an example of an inverse fair value gap? All right. We can see that the bottom of the first candle and the top of the third candle formed a gap, with the middle candle being a red candle, telling us that it is a bearish fair value gap. We can see this gap acting as a magnet, bringing price up, and we can see that the candle only wicked above. All right. So what happened? The stock broke above the gap, breaking the bottom of the first candle, but then went back down, respecting the fair value gap. And what happened after? Price continued on lower, as the fair value gap should have. What didn't happen was the price going up even higher. Why didn't it? Because it respected the fair value gap. All right. So this is not an example of an inverse fair value gap, but it's when the body of the candle actually breaks above the first, breaks below the candle of the first candle. All right, if that sounds complicated, but it's very simple. In part 2, I'm going to show you this on the charts like it is for fair value gaps, but very simple to understand. All right, so a body needs to be formed. All right, if it only wicks, then it's respected and it's not an inverse. But if a body is formed in that 1 minute or 5 minute or 30-minute time frame, whatever time frame you use, if a candle is formed breaking that bottom or low, for a bullish is a bottom candle. If it breaks and forms a candle, that is inverse. For bearish, if it broke the low of the first candle with a body, with a red candle, boom, dropping it down, and it breaks the low of the first candle, the high of the first candle from that fair value gap, now it turns into a inverse fair value gap. All right. Thank you so much for watching, guys. If you liked the video, please comment, like, subscribe, and I will see you guys in the next video. Please share with all your friends, and if you have any questions, please don't hesitate to leave them down below in the comments, and I'll see you guys in the next video. Peace.